Hello everyone. There's a question that every investor or every citizen in India needs to understand. So the question is, are Indian banks losing out to capital markets? There is a report which had come from SBI which says that corporate borrowers are shifting away from bank loans and opting for cheaper and faster options like bonds, equities, internal funds. The share of corporate funding in India coming from banks is expected to drop from almost 32% in financial year 25 to almost 22% by quarter 2 FY26. While bank credit growth is just around 9.5%, it should have been rather 12 to 13%. But the bank results and the NBFCs are highlighting that there is a huge concern in CV commercial vehicles and in MSME sector itself, which will obviously take, or let's say, 1 or 2 quarters more. Let's say by quarter 3 FY26 the things hopefully will go better, but up until now the credit growth in India is just 9.5%. Non-banking funding sources are growing at a stronger pace of almost 17%. Large companies with solid ratings prefer to raise money outside the banking system, and this trend is picking up. Even MSME loans growth, though almost at high as 22%, may slow down in the coming quarters, and as the management of different NBFC and banks have raised flags concerning loans that are being given to MSME sectors and CVs sector as well. This shift means banks could see slower loan growth and thinner margins, which can impact the overall economy. When corporate bypass traditional bank credit, it signals a structural change in India's funding landscape. So we have to wait and watch as to how NBFC as a whole and as a complete banking sector is going to pan out. Obviously, banks and NBFCs have not performed that well in the last 1 or 2 years. There have been a lot of chaos, but there are good quality banking and NBFC companies that you can watch and look into. Thank you.